Hey everyone.
Hey,
We're just getting settled here, but welcome to this edition of RIA Live. We're officially in 2023. Quentin, Happy New Year.
Happy New Year and Happy New Year to everyone out there tuning in today. Thanks for joining us on there. I'm sure a very busy week back to work for a lot of you guys.
Oh my goodness. I see our good friend David Peters, Ted Patel, Rusbe. I hope I'm saying that right.
Yeah.
Lori, good to see you. And Jonathan, great to have you here as well. We've got a special Real Live for you today because we're going to look at Goodegg Investments in our growth over the last, I can't even believe it. This year will be 5 years for us. And we're going to take a look over the growth that we've seen over the last 5 years, but in a specific way that we're looking not just at the growth in the investor base or the number of deals, but really how we've structured the business and how that has grown so that all of you have sort of a model in your mind of what we've done so you can use that for your own businesses if it works, or you can take that as one example and see where you are in sort of that trajectory.
Yeah, definitely an exciting topic today. I know when we were doing this on our last team on site, it was just like a big jaws dropped with kind of seeing where Goodegg has come from over the last few years. So super excited to dive in today. So let's kick it off. So yeah, let's start off with where Goodegg has been. So Annie, back in 2018, you and Julie just starting to get together. Julie's spearheading the biz dev. You're on the marketing and education side, starting this little brand called Goodegg Investments that Annie, of course, you spearheaded. And in that first year in 2018, you guys did 10 deals and raised $2.5 million all in your first year. Super busy first year.
Oh yeah. And oh my gosh, it was so busy. It was like we had almost a new deal every 3 to 4 weeks. And what that allowed us to do, you can see you'll see this as it builds out, but this was a very skeleton version of what the company is now. But 10 deals in and keep in mind, we started the business in May. So this was 10 deals within that second half of the year. So it was a constant churn. And what it allowed us to do was, back when I was in game design, they always said, if you are part of one game development cycle, like one of the big, I can't even think of their names, but anyway, like EA, right? They do these game development cycles that last like 5 years. And you don't learn as much being part of just one versus if you're doing it over and over again, because every time you do a new game, or in this case, a new deal, you get to iterate on all the different pieces of that process, which is exactly what we did. We tried Google Forms versus Active Campaign versus having emails this way, emails that way. And over that first year, we really learned a ton about what our investors wanted, as well as what worked for us in keeping organized.
Yeah, and
But
I'll also add, I know early on, so my parents were on your guys' investor list early on, and I remember when they would get those deals, it felt like every single month, and they were
yeah,
filling up so fast. And
so
so what
fast.
you were
Yeah.
saying is just like it creates that FOMO for your investors, where early on you get all these people and they're like, I want to get in on these deals. I want to do what Goodegg Investments is doing.
Yes, indeed. And nowadays, and Rusbe, I see your hand, so hang on just a second and we'll get to your question or your comment. But yeah, early on it was, this was 2018, keep in mind. So deals at that time were easier to find in many ways. However, that doesn't mean like we're going to fast forward to today. Today, deals over the last year or so the economy has been kind of wonky, as you all know. The financial landscape has shifted quite a bit, and real estate is kind of lagging behind. So there are still good deals, though, out there. They may be a little bit harder to find, but I promise you the investors are still out there. And Quentin and Dee, as you know, what we launched our latest opportunity, we got tons of interest. So investors are still out there just like they were in 2018. And when you find those good deals, they come running.
Yeah. All right. Let's continue on. So 2019, you guys had our first hire. We had marketing, business dev. That's when we started the real estate accelerator program. Again, building the brand and really creating those raving fans has always been a big piece of who we are and Goodegg Investments. In 2019, another rampage of 11 deals, almost $10 million raised, crazy growth in that second year there.
Yeah, that was the first time we were able to break $1 million on a single raise was in 2019.
Yeah.
And you can see if you look at the numbers, right? 2018, we did 10 deals and raised 2.5 million. In 2019, we didn't do that many more deals, and we had it was across the whole year rather than just 6 months. And so we did 11 deals for that whole year, but we brought more capital to each deal. And so that is a way, if you're at a point where you're trying to scale and you're like, I need more deals. It's not always about having more opportunities. It can also be about having the same or even fewer opportunities. As you'll see in the following years, we actually scaled down on the number of deals, but we brought more equity to the table. And so that you can scale your revenue that way as well.
Yeah, so like Annie was saying, 2020, obviously COVID and the pandemic and everything threw things for a whirl, but even here, 3 deals still raised a little bit more than we did last year, but that per deal raise skyrocketed. So again, going back to that education, that nurturing, that brand that we were really building at that time was really starting to get very sticky then.
Yeah, this was a scary time, I'm sure for all of you as well, but this is a scary time because, look at this, we had done 21 deals, which means that every month we were sending out updates on 21 properties, which was a lot in and of itself. But as you all know, when you're not doing a deal or when you're not exiting a deal, there's not that influx of revenue. So we had to figure out how to keep the business going. That first 6 months of 2020, we didn't do a single deal that whole time. We were just trying to hold steady and see what was going on, because just like everybody else, we were in the dark and we didn't know how long this was going to last. But we kept our investor, we kept sending out our newsletters, we kept creating blog posts. I created an entire blog post about why I was personally investing in a deal in March of 2020 and the opportunity that I saw. And so we were very much, even though there was a lot of trepidation and we had never run a business through, something like this. So there was a lot of fear, but life expands when you face that courage. And so in that year, as Quentin mentioned, we didn't do that many deals. But you can see we held steady on the amount that we raised. So even though we did 3 deals, we brought significantly more capital to each deal. And so we were able to hold steady that year.
Yes. And then coming into 2021, another big year for Goodegg. So again, continuing to grow the team, adding in different arms within the team. So that's where we started bringing in an underwriter, asset manager onto the Goodegg team to kind of start getting more control on our side. That brand still at the forefront of what we're really focusing on, the education, investor relations, and all of that. And this is also when we first started doing our JV deals as well as funds in here in 2021. So as you guys can see, we've almost 4x'd our raise capacity here in 2021. Again, not doing significantly more deals, but really focusing on expanding that raise capacity there. And then also, which was super fun to be a part of, launching Goodegg Gives, which we'll talk a little bit more about in the values and building that brand later. But yeah, 2021 was a big year. This was the first full year I was at Goodegg, and man, were we moving and shaking all year.
Oh yeah. Oh yeah. And for everyone here, I want you to really think one of the most important things about 2021 was that we started to really build out these different arms of the business. And that has what allowed us to geometrically scale the business. Whereas before, if we think back to 2018, it was just me and Julie. And we each wore a bunch of different hats. And we knew someday we wanted an underwriting and acquisitions part of the business. Someday we knew we wanted an asset management arm. And a business development arm, which she was doing at the time, investor relations, and then marketing education was what I was working on. But we knew that someday we wanted other people to be able to come in and fill out these roles and expand these arms of the business. So I would challenge all of you to think, where on this trajectory are you? Are you a solopreneur currently doing most of these things on your own? And if so, what does this trajectory look like for the business that you want to build? What are ultimately those arms of your business that you want to build out so that you can get to your ultimate goals? So one of our goals, and we tried in 2019, didn't work out, tried in 2020 and kept trying, was we wanted to own the whole deal. We wanted to do the whole deal, not just raise equity and do little bits and pieces here and there, but we really wanted to be part of it start to finish. And so to do that, we knew we had to have that underwriting and that asset management part of the business to be able to bring that expertise to the table from the very beginning so we could reposition ourselves as not only capable of raising capital, but also capable of being part of the front end of the business, as well as the ongoing asset management. And so we always knew that that was an arm of the business that we wanted to build out. And in 2021, we took that step. And that's why, as Quentin mentioned, that led us to be able to doing these JV deals where we weren't coming in just to bring capital or to have a small role in the deal, but we were really becoming more, I think at the time we were maybe, they were 60 and we were 40 or something like that. And then now eventually we've become 50-50 partners because of that positioning. Because we had this expertise on our team. So think about that as you think about the path that you want your business to take. Are these different arms of the business and what they contribute to your overall positioning and the opportunities that are ahead of you.
Yes, and that'll take us nicely into 2022. A lot of the same things still going on as 2021. I know one thing that we realized after doing this exercise is that it kind of grows in years of two. So every 2 years we kind of go up, continue on, go up again, and continue scaling. So that was definitely kind of in line with 2022 here. Again, it was more just like looking at what we built in 2021 and how can we really refine what we built in 2021 and set that up to scale and solidify through 2022. So through here, one thing that we did add on is a money-wise kid. So again, going back to like our personal values here at Goodegg, and empowering and educating families and children was another avenue that we were able to do that we started in 2022 on top of our Goodegg Gives and the deals that we did throughout the year.
Yeah. I'm not going to lie. This was not, so all these arms of the business, as we built them out, this was not easy by any means. It's easy now looking back and we're like, oh yeah, obviously we needed underwriting, we needed this. But at the time, it's like you're in a fog and you're like, I don't know what I need. And I think I need this person. And we've certainly made some hires, people who were maybe not right for the role, or the role was not the right one for the business. And so you've got to prepare yourself for that as well, is that it's not always this clear. It's clear looking backward, but looking forward, it may not be as clear when you're building it out, which is why we're sharing this with you. So you have sort of a model or a framework in mind as you're thinking about who you might need to hire. But it is a process for you to figure out your values, as Quentin keeps coming back to, and we'll talk about that more as well. That is really the foundation for you finding the right people to join your team who will take on your mission and vision as you do, and help you to then carry it out. But 2022, oh my gosh, I can't believe that was just last year. It seems like almost a lifetime ago already. 2021 was the first year that we hit above 10 million on a single raise. And that was a big deal. So you remember 2019 was the first time we surpassed $1 million on a deal. 2021 was the first time we surpassed 10 million on a deal. And we realized at that point what we had, and we saw the capacity for us to be a much larger part and a much more valuable partner as well on these bigger deals and opportunities. And so in 2022, as Quentin mentioned, we had the JV deals, but also we started launching funds. And we really saw, we really, and we still are in this process of shifting investor expectations and the process that we go through with, in 2018, if you were on our list, you saw a different deal every single month. And you as an investor had to go and look at it and see, is this the right deal for me? Is this the right market? Does this balance out my portfolio? Versus now, we know what our investors want. We've gotten very familiar with the types of investors that we attract, and their goals and what they're looking for. And we've also got our pulse on the market and what's going on out there. And so that's what led us to launch and continue to launch funds, because they are, for many people, not only a safer bet in this economy, but also an easier process for our busy investors. And so because we've built out these arms of the business, because we've been able to negotiate and be a bigger part of these deals, now we've been able to create these funds, which ultimately gives us more control in each of these offerings. So now you see the numbers again, like Quentin mentioned. I can't remember. I almost have it in my mind. There's a technical term for this where punctuated equilibrium. That's the technical term for this, where and you see it happen in nature too. There's growth and then there's stability. And there's growth and there's stability. And as you look back over our history, that's what you see is there's growth. And then for a year, usually there's some stability. So you see that in 2021 to 2022, the amount raised is fairly stable. The number of deals went down because what we did internally was we kind of restructured and headed more towards the funds. So you see that, you see that punctuated equilibrium over time.
Awesome. So we want to pull back a little bit and kind of go back in time towards that 2018, 2019 time and take a look at really what were the kind of key differentiators that really set Goodegg up in those earlier years to get to where we are today, growing the team, having the different arms of the business, structuring our deals differently. And we kind of boiled them down into 4 pretty simple things here. So first off, our brand, the Goodegg brand. Who are you helping? What is your brand identity and your voice? And how are you creating those raving fans early on? I know I was saying my parents were always looking for those soft reserves every time that you guys launched a deal early on. And that was a big part on gaining a lot of momentum there. And then on the systems and automations front, leverage a CRM. I know this was a big thing that we did really early on when we initially implemented ActiveCampaign. It allowed us to automate a lot of repetitive tasks, really help with the education side with our investors, and really be able to nurture our investors at the right time with the right type of content. I know we've been touching on this next one a little bit throughout the presentation, but strong values and culture. So what are your values? And why would someone want to invest with you? Why would they want to work with you? Or why would they want to partner with you? And these values really lay the foundation and kind of the guideline on how and who you're going to be kind of working alongside. And then on the education front, this was a big thing early on as well. I'm sure all of you guys have seen a lot of Annie's videos, gone through our massive library of blogs, but helping empower and educate our investors was another massive differentiator early on, especially to really get people and create those raving fans for our brand early on.
Yeah, and that education piece is arguably the easiest low-hanging fruit to start with. And it's a big part of what we talk about in RIA. That's why we give you that vault of blog posts and then ongoing blog posts so that you can educate your investors and grow that investor base. Because once you grow that investor base and create those raving fans that will follow you anywhere, then you've got true value in your business. And then you can start to think about all these things that we then grew in 2019, 2020, 2021, where you can say, okay, now I've got this viable group of investors who can bring 3 to 5 million or more to the table. Now, suddenly a lot more partners are going to be like, hey, you can bring that much capital to the table. Yeah, let's partner up and do something together, right? And so then you've got to think about how you're positioning your brand and your business to get the most value for yourself, your growing business, your growing team as well. So there's a lot of moving parts, but I would say that education and that investor base is where you start, but that's only just the beginning. That's arguably the easiest part. And then beyond that, that's when you really get to the starting line and you get to really start to scale and build your business, build your team, and ultimately reach those goals that you had set out at the very beginning.
And then, so with that, I know a lot of people out there in our real estate accelerator group have been having a lot of success since they joined our program. So we recently did a short poll. We have over 15 people have either are actively raising or have recently closed on a deal, even just within the last couple of months. So as Annie was saying with the economy, even though it's a little weird out there right now, people are still out there. There are still deals. There are people still raising capital out there. So our group's raised over $140 million for their own deals. We've had over 30 partnerships formed within the group. I know some of you on this call have been a part of them too. We've helped launch over 35 new syndication brands through the real estate accelerator, helping people raise $2 million, double their raise capacity, and even raise over $40 million since getting started over the last 3 years.
So if you think about, right, like where we were in 2018 versus raising 2 million, 3 million on their very first deal, like we struggled to scrape together even, I think on our first deal, we raised 420K, which I always say included 100,000 from me and my mom. So it was really, 300K that we were able to raise on that first deal. But if we had been able to raise 3 million or more on that first raise, we would be light years ahead of where we are now. And so that's the value that RIA brings to the community, is rather than having to reinvent the wheel and start where we did with scraping together a few 100K per opportunity, really jumping you ahead based on everything that we've learned over the last 5 years, and jumping you ahead so you can get to where we are and even beyond much, much faster.
Yes, absolutely. And with that, we are coming on to the tail end of our real estate accelerator end of year extravaganza, or I guess beginning of year now, for our diamond and gold programs. So our diamond is pretty much our business in a box for all of you guys. So like Annie was saying, this is going to be the fastest and quickest way to take you from where Goodegg was in 2018, probably to where Goodegg was in 2020 or late 2019, just in a matter of months. So we kind of look at our real estate accelerator as how can we take everything Goodegg, package it up for you guys, and help accelerate you guys in your capital raising business.
Yeah, these, because we know the opportunity that lies ahead. I mean, you all know real estate lags behind with all the economic changes, but what that means is in the coming year or two, there's going to be a ton of opportunity. And so we want to make sure that all of you are positioned as best as possible for the oncoming opportunities. And so for those of you who are already part of RIA, we look forward to continuing to support you through that. Or if you maybe joined Gold and want to upgrade, now is a fantastic time to do that. Or if you know people within the syndication community, send them our way. And for those of you who are not yet part of the Real Estate Accelerator, we invite you to schedule a call with us so that you can learn more and see if this is the right path and the right opportunity for you, so that you can get from where you currently are to where we are and even beyond.
So, and with that, we'd love to open it up for any questions that anyone has, whether they came up earlier in the presentation. Would be happy to open it up to everyone.
This is your chance for anything you want to know about Goodegg Investments and our growth.
Hello, you guys.
Hey, Lori.
New Year to you both.
Happy New Year to you.
Yeah, so I know that you guys had sent out an email, and I'm not sure if you received it or had a chance to see it yet, about questions about how to kind of really get the business off the ground even more. And I have a sticking point. I know that at some point, to grow the way you did, you had to grow that email list, right? So do you have modules, or did I miss any of that on really how to kind of expand that and really have that, catapult the opportunity to grow the investor list?
I wish there was one magic pill I could give you, Lori, to be like, just do this, and then next month your list will explode.
Right.
But we do have that roadmap. And at the bottom of the roadmap in the phase 2 section, there's all these ideas for different things that you can try. And the thing is, based on your investor avatar and your audience, different things might work for different businesses. But I will tell you that one thing that almost categorically works for everybody, us included, is being guests on podcasts. And not every podcast, because you're going to have to, it takes some time and investment, because you start with the podcast with smaller followings, and then you use that to build up your track record and get into to be guests on bigger podcasts. And so that is one avenue that I would highly recommend. I know you're already on some podcasts. Definitely do that. But that, I think having opportunities for people, that is where you see that growth. And we still see that to this day. When we launch an opportunity, we see more interest in people signing up. So it's that balance of educating people and helping them understand, but also finding those opportunities. That you saw that first year we had 10 different opportunities, and that helped us grow our list very quickly, because every time people were like, hey, did you see this? Check this out. And they were referring their friends, and that helped to grow the list. So I know, as I said at the top of the hour, deals these days can be harder to find, but they're out there. We are, we're pursuing this deal, and we've almost got it under contract. Where originally it was under contract at, I think, 70 million. and it fell out of contract. And, as the market has shifted, we're going to get it for, I think, 57 million. So there's
Oh my-
definitely opportunities out there.
Oh, that's
You've just got to, be in the right place at the right time.
And are you finding that social media really kind of grew your list, or was that just really very secondary?
It was secondary.
Okay.
Yeah. A lot of people spin their wheels in social media because it's a very outward thing. I would say early on, your most powerful social media tool is actually email, because
Right.
that goes to creating your raving fans, the people you've already attracted. You're keeping them in the loop and showing them what's behind the scenes, and you're strengthening those roots with them. Social media is it's very shallow, right? They scroll, they see something from you, they may pause for a second, but they may tap, or like that's the extent of their interaction. So social media for us came much later. For the first, I'd say even 2 to 3 years, we did very little social media, and we did mostly internal work with the list that we were attracting already.
Okay. Terrific. Thank you.
You're very welcome.
And it was by here. Instead of first you had 10 deals, what kind of, they must have been small deals, but can you expand on what kind of deals were they? Were they like small multifamilies, or were they?
Yeah, good question. Good question. And thank you for your patience. I know that you were holding that question for a long time. So thank you. Early on, we were a small kind of a minority partner in those deals that we were part of. So we weren't doing the whole deal. So if we were bringing, let's say, 200,000 or 300,000, it might have been part of a deal that was, millions of dollars. So the total acquisition might have been, let's say, 15 to 20 million. And the raise was maybe, let's call it 5 to 8 million. And our little piece was a small part of that overall pie. So that's where the partnerships come in handy, when you can find those partners where they might be bringing multiple GPs to the table, each of whom is bringing some portion of the capital, has some responsibility in the deal. And that way, that gets your foot in the door. And early on, we were kind of co-branding with our partners. So we would say, this is because at the time we didn't have much of a track record in that first year. And we would say, well, we don't yet have a track record, but this partner that we're partnering with, they've done 20 deals already, and they've exited all these deals. And so we're partnering with them. So it was like this, we were down here and they were up here, and we were really positioning it so that our investors saw, hey, we're giving you this opportunity to invest with this great operator. And over time, as we built up our track record, then we started to kind of bring down their weight, so to speak, in the positioning. And eventually we kind of minimized that and really brought up our track record, our reputation. But I would say in those early days, it's, you can find small multifamily deals where you can do them on your own. But what we did was raise a portion of the capital for these larger deals through these partnerships.
Mhm. So Annie, I just have one more question on top of what you just answered. When you are also exposing the operator to your investor, do you have a risk of investor going directly to the operator rather than working with you?
Yes, we've talked about this. Oh my gosh, this is the age old. So Julie and I talk about this as the hole in the boat problem, because there is that risk, right? There is the risk if you let somebody know you're partnering with, let's call them Alpha Investments, there's a possibility that your investor didn't know Alpha before. And now all of a sudden they're like, wow, Alpha looks like a really great company. Let me go and sign up on their list so I can see their deals. So there is that possibility. We always had a handshake agreement with our partners that, because they knew who the names of our investors. And so when they saw that an investor signed up directly with them and tried to schedule a call, they would pluck them out and direct them back towards us and say, yep, you're welcome to invest alongside us, but it's going to be through Goodegg. And so, but it is a very kind of honor system thing, because there probably were investors who went direct that maybe they missed it, or maybe they hadn't yet invested with us. They were on our list and they were on their list too. And it's just not unfortunately, there's not a master database, and there's not an easy fix to this problem, which is why that raving fan culture is so important, because you want to create a place that nobody wants to leave, even if they have the same exact deal, or even maybe even better deals over there. But the service and the experience that you provide is second to none, then people are going to stick with you. And so that's what I would challenge you to think about is, not necessarily how to plug the hole in the boat so that people don't leave, but what are you doing that's different from everybody else so that people want to stay? And so that's ultimately what we chose to focus on, because there's nothing we can really do about the hole in the boat, but we can make the boat, a more amazing place to be, so that more people want to stay.
Okay. All right. Thanks.
Thanks. That was a great question. All right. Anyone else?
Thank you guys. Great presentation.
Yes. Thank you. Thank all of you for your time. And as you can tell here at Goodegg Investments and here through the RIA team, we are an open book. And so through RIA, we really open up the entire business to you, and even parts that we don't cover in the program itself. Members ask us about certain things and we open it all up. And so even if you think of questions or want to see things after this session here today, feel free to email us at ria@goodegginvestments.com, or you can call or text us to get a hold of our team and schedule a call with us, whether to talk about RIA or to talk about your business. We're all in the same industry, and it's a small, tight-knit industry, so we're always here to help. Let us know how we can help you. And again, Happy New Year to all of you. And Quentin will be back in 2 weeks. Is that right?
Yes, so join us next time, same day, same time on January 18th. We'll be back.
Happy New
All
Year.
right.
Thank you.
Thank you all.
Thank you, everyone.
All right.